Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil. Here are the headlines. Indian markets kick off March series on a positive note after declining for 3 consecutive sessions. State Bank of India Life falls 12% after 35 block deals. Open interest in Jet Airways surges after founder Naresh Goyal agrees to step down as chairman. India's GDP is set to grow at its slowest pace in 5 years after the third quarter growth falls to 6.6%. Government also revises second quarter growth lower to 7%. Bharti Airtel will raise 32,000 crores through a rights issue and perpetual bonds as it looks to deleverage its balance sheet. And Bajaj Auto and Escorts stocks rebound after they report an uptick in February sales.
Let's see what the markets are doing at this point of time. We are up 50 points on the Nifty. We are above the 10,900 mark. So there is positive traction that's happening on the Nifty. Pull up and see what the Bank Nifty is doing at this point of time. The Bank Nifty is also managing to move up. That's doing even better. It's up almost close to 1% in trade. It's a new series today, so let's see where positions are being taken. Currently, if you're looking at the positions at this point of time, again, put writers are active from 10,800 to lower levels and call writers from 10,800 to higher levels. We are above the 10,900 mark in trade, so put writers at least at this point of time will be writing in trade today. So if you take a look at what's happening in today's trade, is the put writers that are writing in at the 10,800 mark and 10,900 mark, and call writers are writing in at the 11,000 level. So it seems that the markets will be range bound between the 10,800 to 11,000 mark in trade. So that's what the trade setup is indicating. Agam, on the F&O side, stock side, what are you spotting?
Absolutely, that's a new series, so I'm sure there'll be a lot of stocks which will see a surge in increase in open interest. So let's pull up that list and take a look at where we are seeing that traction. Just is right at the top. So is Arvind, actually, looking at a little bit of recovery, up 4%. Jet Airways, of course, as we have addressed, that's also up and about after reports suggest that Naresh Goyal will step down as chairman. SAIL and Reliance Power are among the others. SAIL is looking at a significant up move in today's day of trade, up as much as 6%, even as it adds another 10% in open interest. So a whole bunch of stocks out there, Darshan. Just Jet Airways and SAIL on my radar today.
Okay, so we'll watch out for all those counters. Before we move on, pull up Anup Engineering. That's the new listing that has happened today. It's trading at 474 currently. It opened at 450. Now remember, this is demerged from Arvind Limited. Arvind Limited got split into 3 companies. It was Arvind, which right now is the textile business. What got listed today is the engineering business, and finally Arvind Brands will get listed at a later stage. So it's up on a 5% circuit. Is that what I can see? It opened at 451. So that's Anup Engineering for you. So those are that is something that we need to watch out for. But in today's trade, let's highlight which are the stocks that we want to discuss in today's trade. SAIL, JP Morgan has upgraded the counter to an overweight, given the fact that they believe that steel prices will go in even higher. They like Tata Steel and SAIL, so we'll talk about SAIL. Jet Airways, Reuters reporting that Naresh Goyal is likely to step down as the chairman of the company. So despite news of planes being grounded, Jet Airways has managed to do well. Indigo, on the other hand, isn't doing that well in trade. The other counters we want to talk about is Vedanta, Dewan Housing Finance, and Escorts. Escorts came out with its monthly sales numbers. So these are the counters that we'll talk about. But before we get in our guest on the show, here's a reminder: if you have any queries regarding futures and option market, you can call us on 02245404141 or write to us on Twitter, Facebook with the AskBQ hashtag.
Okay, on that note, let's get in our experts for the day. We have Ruchit Jain of Angel Broking and Navneet Daga of Yes Securities joining us on the show. Good morning and thank you both for joining us. Ruchit, I'm going to start with you. Your view on the benchmarks. How are you going to go about this?
Yeah, hi, very good morning, everyone. Well, if we see the recent past, then last 3 series, we have seen that the Nifty has not shown any kind of changes on the closing prices. Now, if I look at the December expiry, then Nifty closed the December expiry around 10,780. The January expiry Nifty closed around 10,830, and again the February expiry has similar close, just tad below 10,800 mark. So series on series, last 3 series we have not seen any kind of price change as far as Nifty index is concerned. This time, if you see rollovers in the Nifty are below their averages. The 3-month average lies somewhere around 67-68%, and the rollover is around 60%. So this is clearly an indication that on the index front, we are starting this series on a lighter base, and whenever the fresh positions would be formed in the index, then only one should expect a directional move. Otherwise, this consolidation which we have seen since last 2.5-3 months, this consolidation is likely to continue. 10,700 put option has been seen a good amount of open interest, so this is one of the support that we are watching for. And on the higher side, 11,000 call option during the entire last series as well, we have seen that 11,000 call option had the highest amount of open interest, and even this time we are starting with the good OI in 11,000 call option. So we believe that this range bound activity would continue on the index front unless we see any kind of fresh positions getting built up or open interest increasing. No, we are not expecting any directional move on the index. Yes, some stock specific or sector specific, we have seen a good broader market participation during later half of February series. So this is a good sign. So some of the sectors which have done well, they can continue their positive momentum, specifically auto, metals, and some mid caps. We are expecting in this series these three sectors to show some outperformance. So from a trading perspective, I think traders should continue more on these sectors, auto, metals, and mid caps, where some outperformance could be seen.
Okay, that's the strategy. Expect more of a consolidation strategy is what something Ruchit has indicated. Navneet, what's your view? What's the strategy that you want to highlight in today's trade?
Hi, good morning. Look, it's largely been explained that we are in the consolidation mode for the last 3 months or so, and that's where we are stuck up. But however, I'll find some kind of a silver lining in this kind of a consolidation. We are able to digest some bad news in the markets. The FIs have somewhat has been kind of a neutral stance in the overall market and the current series, and it's look likely that now the fresh rolls on the way the rolls, the lack of rollovers are happen. The chances that the fresh longs build up might happen in this space. Overall global setup, if I look out, it's quite encouraging. We have seen the kind of Indian markets being underperformer in terms of overall space, but now it's looking likely that the way that we are able to digest the bad news on the lower side, the chances that we might try to inch up towards that 11,100 mark again and try to see if the breakout happens near to that zone. But until that happens, one will need to play for the consolidation, and that's the strategy should be. Basically, since now we have got a Nifty weekly expiry, it's easy to trade on for the consolidation view because of the T30K. So one can sell 10,800 put options for the current series, that is for 7th of March, and simultaneously sell 11,000 call options with a combined premium of almost 80 to 85 points. One keep a strict stop loss if this outflow widens towards 120. I'm looking at an entire complete T30K in this strategy and looking for the targets at 40 points to 5 points in this strategy.
Okay. Well, that's a short strangle that Navneet is playing, and for those who aren't aware of that, a short strangle is when one sells an out-of-the-money call and out-of-the-money put in anticipation of decrease in volatility, and the strategy becomes profitable when volatility decreases, followed by a contraction in option premiums. In this case, of course, Navneet is looking to sell if I'm not mistaken, the 11,000 call and the 10,800 put, and these are for the upcoming weekly expiry, which go out of expiry on the 7th of March. So keep an eye on that one. And moving on, let's also take a look at what stocks our experts are betting on. Navneet, I'll come back to you. What stocks look interesting to you today?
Overall, I've seen somewhat a higher rolls which is happening and kind of a base formation which is happening on the metal stocks, and somewhat steels is the one whereby we have seen a good amount of traction. JSW Steel, Tata Steel, SAIL, all of them are looking interesting. They have formed a good base and go forming and bouncing back from the base and seeing a higher closing on the daily basis. Now it's looking likely that the way the build-up has happened, Tata Steel can see an upside towards 530 odd levels. So one can look to still initiate a long position on the March futures in the range of 505 to 508, which is current market price, and keep a strict stop loss on the lower side of 493, and look for an upside target of 530 on Tata Steel. Secondly, I've seen a very strong roles happening on the cement sector, ACC, Ambuja. There are some laggards, some small mid-cap one also catching up. The good base formation also happened in the likes of India Cement. I was looking at the charts whereby the 80 odd level has been a good confirmation, so a solid bottom which has been in place now. It's just trying to move up from that levels and looking like the one can still catch up the rally. Look to be entering in the range of 90 to 91 for the March futures, and keep a strict stop loss on the lower side of 87 and play for a target of 96 for the coming week.
Okay, that's the view that's coming in from Ruchit, from Navneet. Sorry, Ruchit, what's the stock? Which are the stocks that you want to highlight?
So, a couple of buy recommendations. One is the first is on Bajaj Auto. During last series, we have seen that the stock within the auto space had shown a good outperformance. Long positions were created. The stock was up by around 13%, and those long positions have been rolled over too, as we have seen, and a rollover of about 85-86% in Bajaj Auto. So long positions are still intact. Today, you can see an open interest increase of around 9 to 10% since morning. So this is clear an indication that this outperformance could continue in this series as well. 3000 call option which can be bought around 53-58 range for target of 160 from the expiry perspective. And within the mid-cap banking space, DCB Bank is expected to show some good outperformance. Primarily, if I look at last couple of months chart also, then the up moves were supported by very good volumes. When prices had corrected, the volumes on the correction was quite less. The stock is comfortably trading above its support of 179, 178. So we are expecting some good momentum within this in DCB in near term. 190 call option is trading around 3.5 rupees right now. That can be bought with stop below 1.25 for target around 8 rupees.
Okay, let's get in some of the other stocks which are moving in trade. Pull up SAIL. SAIL is something that we want to talk about today. JP Morgan came out with a note on SAIL and they have upgraded the counter. The open interest build-up is not there at all, but the counter has managed to move up almost 6%. Navneet, you have a long call on Tata Steel. Would you share a similar view on SAIL?
Yes, I was mentioning that basically kind of good formation which has happened on the lot of the steel counters, whether it's SAIL, JSW Steel, Tata Steel, all of them kind of a similar pattern. They are normally a cyclical stocks. They move in a tandem, and SAIL is again a good strong formation on the lower side of support has been placed, and now at levels of somewhere into 44 to 45. It has moved up almost 10% from that levels. I'll wait for an entry in this stock rather than chasing it, but somewhere in the range of 49 to 50 is a good entry point to me as a trader, and I'll look for an upside target of 55, and on the lower side unless it breaches below for again of levels of 45, one should look for any dips on the lower side to be entering into that stock.
Okay. That's your view on SAIL, and with that we move on to, well, Diwan Housing Finance, a question that we keep getting, whether or not it would be a good idea to dip into it or no. But it's up as much as 2%. Its open interest is up as much as 3%. It's currently at 130. Fundamentally, the news is we have yet another ratings agency downgrade one part of the company's debt. And this is of course following a whole host of other downgrades coming on these companies' debts over the previous few days. The recent one before CRISIL today was ICRA, which had also downgraded the company's short-term debt. But it's gained as much as 17% in the last 1 month. So one would really want to know whether or not there is a recovery in sight, at least technically. And as I've suggested, there has been a little bit of increase in open interest, but this could possibly also be because it's a new series. But let's take this question up with Ruchit. Ruchit, how do you see trade on Diwan Housing pan out? What would you do with this?
See, though after the correction that we had seen in the month of September, we have not seen any kind of positive biasness in Diwan Housing Finance. The stock has clearly shown an underperformance not only within this space but within the entire mid-cap basket as well. And the price up move which was seen during last week, that was just a pullback move. During last month, that was just a pullback move because the momentum readings were quite oversold. During first week of February, the RSI on the daily chart was trading around 15 levels. So I think that was the only reason that we have seen a pullback move. Any kind of up moves from here on, the stock will again face a selling pressure, and this underperformance is likely to continue. So clearly, I think if one is looking from a trading perspective to enter Diwan Housing just because prices have corrected significantly in the last 6 months, then do not enter this stock. This underperformance performance is likely to continue. Rather, if within this housing finance space, if one has to pick up any stock from a trading perspective, then LIC Housing can show some sort of pullback move in this series towards 510, 505 kind of levels. So at current levels, one can take a long call in LIC Housing Finance with stock below 460 for target around 510.
Okay, Ruchit, what's your view on the aviation space? Because what I'm seeing right now is that Jet has managed to move up in trade today while all sorts of problems are there, while Indigo, which is clearly the incumbent here and the largest player, is seeing a downtick in trade today. How will you play the aviation space for trade?
So Darshan, Jet Airways, I think just one day of up move should not be considered as a part of an uptrend. This is just a pullback move. If I look at last 7 months of data, then every pullback move has got arrested on the higher levels, and we have not yet seen the stock giving a breakout above its 200-day moving average. So until we see a breakout or the up move supported by very high volumes, I think this stock, this is just a pullback move which one should clearly avoid. Even if it gets extended up to 245, 250 kind of levels, I think that would be an opportunity to exit from this stock. Relatively, Indigo has seen an up move during the month of December and January, and then up move was supported by very good volumes. So I think some outperformance on a relative basis could be seen in Indigo. The prices right now are consolidating since last 2-3 weeks, but this entire consolidation just seemed to be a time-wise correction. Prices have good support around 1050, 1050, 1070. So if I get minor dips around 1000, 1050, 1070, that dips or that range could be used as a buying opportunity with stop loss below 1030, and one can again expect the higher end of the range, which is placed at 1200.
Okay, what about you, Navneet? What's your view on the aviation space?
To my understanding, this has been a quite volatile one in terms of Jet because of the kind of a news flow that we get. But looking at only the chart formation, it has started to form a base in that range of 200 to 225. It has seen a multiple supports out there into that range, and it's only for the high risk traders, those who can digest that kind of a volatility. One can I'll believe that this base formation has already started to happen on the price chart, and it's looking likely that somewhat a bounce would be there, but it's only for a very short term trader who can digest the kind of a volatility. One can still look to be venturing into that the current market price. I look for a smart upside of near to the 250 odd mark, but it has to be with a vigilant, very stop loss, and the levels on the lower side until it breaks below 210 levels on the closing basis. It's look likely that it might bounce from that level.
Yeah. That's your view on aviation companies. Let's also take a look at Vedanta. It's another one that we wanted to address today. On a technical basis, in the month of February, it hit levels of around 150, and that was its 52-week low. But since it has recovered, and it's up 2% today, of course, very little change in open interest. It's also going at a discount of around 1.5 rupees. But the real question is this recovery signal anything, or is this about of short covering? That's the real question that we're asking. Navneet, let me come back to you on Vedanta. Currently at 173 rupees per share. How are you reading these variables right now?
Vedanta as looking likely that the way the other metal stocks have seen a bounce back from the lower side, it's looking that the similar pattern has been visible in Vedanta. But however, I see a lot of significant resistance on the higher side. There are chances that it might get into that resistance mode in the range of somewhere near to 180 odd, but still a far away. It's still a 5% odd kind of a move on the upside. So to my understanding, again, this is not a great counter to be in, because the kind of gaps that we have seen on the higher side will prove to be as a resistance point on the higher side. The better formation that we have already spoken about is like of the metal stocks of likes of JSW, Tata Steel and SAIL. They've got a much better formation to play on from a trading perspective.
What about Crompton Greaves, CG Power? It's moved up 10%. The open interest build-up isn't very, very high, but definitely it's managed to inch up in today's trade. There is strong traction, but remember, this is an extremely volatile counter, has been all over the place over the past few weeks. So CG Power, Ruchit, does the momentum now seem to be shifting on the higher side?
Darshan, as you rightly mentioned, that last 1.5 months, we have seen a lot of volatility in the stock. The one thing is good that recently on 14th of Feb, when the prices recovered from its low of 21-22, the volumes were quite high. And looking at that volume structure, certainly this pullback move was on the cards. Now we expect this pullback to continue up to 39-40 rupees, and the resistance would be there around 39 to 40 rupees. So from current levels, if anyone is already holding the long positions, they can wait for extension of this pullback towards 39 rupees.
Okay, that's your view on CG Power. We actually have some discussions going on on your YouTube chat on Biocon, and whether or not it is a good idea to short Biocon at 627 to be precise. We have Biwa Tiwari and Jeevan Tej who are looking at this possible position. So let me take up Biocon with you guys. It's currently trading at 629. That's where its March futures are. And I'm looking at the chart for Biocon through the month of February. Well, again, not too much to speak for. It's largely moving around between 600 and 650. The question really here is, can we short at this point in time? Navneet, what's your view here? Is a short opportunity arising in Biocon?
Basically, look, there's a two-way to trade this stock. I'll look for shorting only below if it started to trade below 610 odd levels. It's kind of a more support and resistance trade. It is likely that bouncing from that support odd zone or to 600 to 610 odd zone, and simultaneously the chart formation is showing that nothing great has happened in the last couple of months. It has seen a higher resistance at 650 to 660 zone, so it's a kind of a trading band stock. If you buy near the support zone and sell near the resistance, it is giving you a good opportunity to entry and exit. But however, from a tactical trading perspective, I'll not go short at this current level. I'll wait for the higher level somewhere in the range of 640 to 650. That's where the more comfort is, another 3 to 4% up move. That's where the more comfort is to be on the short side. And simultaneously, if it's break below 610 levels, then only look for a momentum trade on the downside to take place.
Okay, anything apart from the stocks that we've discussed, Navneet, anything interesting that's popping up on your screen?
Look, I believe that somewhat in the range of PSU banks. Within that PSU banks, SBI seems to be in our radar. It has seen some kind of a support zone emerging at the range of 260 to 665 range. It has already seen a good bounce. Any dips towards that level of 270 is look to be, to my understanding, the good risk reward. I believe that the kind of a support zone it's a tendency to bounce back from that support zone. So one can look to be on the buy side. We are looking for an initial target of 290 odd zone for this expiry.
Okay, Ruchit, that same question to you. Anything interesting that's popping on your screen at this point in time?
So Hero MotoCo, within the auto space, I think this stock could show a pullback move if it crosses 2710 today. So because if we look at the lower time frame chart, then 2710 is the resistance. But the kind of open interest has been shaping up. If we see a breakout about 2710, then one can expect a good momentum towards 2830, 2840 in very short span of time. So I would recommend a breakout trade, a conditional trade to buy about 2710 on Hero MotoCo for target around 2860.
All right. We do have one more query on Bajaj Auto, and I just want to suggest that we have one of our experts, Ruchit, who has suggested to buy Bajaj Auto 3000 call, and he's put a target of 160. This one is Revant, who wanted a view on Bajaj Auto. So Revant, there you have it. That's your view coming in as far as Bajaj Auto is concerned. And well, on that note, I'm going to take a moment to thank both our experts for joining us and taking us through their views. And of course, there's lots more lined up. So stay tuned to Bloomberg Quint, and don't forget to go on to our website, bloombergquint.com, and check our futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint.